Hey traders, welcome back to the channel. Today is Wednesday, November the 5th. We're looking at this day right here. They started out near this line in the sand above 674, bounced off of it early in the morning, found a high and came back. We'll come back to this chart and also look at some smaller time frames. I want to point out a few things. But first, let's look at the levels and the game plan for this morning. So 674.35, slightly refined level above that breakout area that we've been talking about for a few days here. Staying above 674.35 to 674.50 was the bull case. I want to bring your attention to this. So on the 1 hour and the 30-minute charts from the day prior, from Tuesday, it was essentially a bullish consolidation pattern developing. So the bull case was that price could pull out of that consolidation, and we were targeting 680. So keep that in mind. You can read the bear case below. Essentially, if they got below that line in the sand, 674.35 was the pivot or the axis level. If they got below that, it probably wasn't as good for the bulls. At least hourly closes below that, because then they would be back into that bearish consolidation pattern we talked about yesterday. So read through this and you will get an idea of what we had going into the morning. Here's a screenshot of those same levels plotted before the opening bell. At the open of the regular session, 9:30 a.m. Eastern, they came down pretty quickly into this 674.35 area. Got below a little bit. If we're going to play by the rules, we're going to give the market 15 minutes to settle in. So at 9:45, that's the first 15-minute candle. They were above this, coming back down into it, but they missed it by just a penny or so. The low of this next candle, 9:46 a.m., was 674.41. So even if we adjusted this with 5 cents above and triggered the trade at 674.40, we would have missed that by 1 penny. They took off, and I want to point out that at this time of day, right after the open, the first few minutes or so, I was seriously considering just loading up maybe 6, 7, 8 contracts or more, buying here at the low of that bullish consolidation, which we'll look at on the hourly and the 30-minute chart. That was spelled out in the game plan, and just riding this thing up and ignoring the levels and see if they can get to 680. Call it, 674.50 or so, all the way up to 680. That's 55 E-mini points. So that would have been quite a haul if I had, 8 contracts in play the entire time. I did not do that and regretted it the rest of the day after they took off here and I didn't want to chase trades. I thought I'll just play by the rules, and I did, and you'll see the recording of what I did. So strictly speaking, no long trade at 674.35 because of that near miss there. When they got up to the next level, 676.11, if you'd gone short there, per the rules, you would have incurred a, 16-point fumble as they messed around. They got outside on the other side of the fumble threshold. So giving 16 points back to the market and a base, or 4 points at least, as they continued higher when you reversed. And then 678.39 would not have been triggered because it was a near miss several times. So when they got up to it, that was your clue, kind of like we've seen before, bullish momentum. That was your clue that they probably would not respect the level for a base hit once they hit it. And sure enough, they went higher. So no trade at 678.39. And then 680.64, you can see pretty good solid base hit there. If you were patient, I took this trade, so you'll see that one in play too. But unfortunately, I took this trade and incurred the fumble. There was a chance to jump out at break even here when they came back. And by the way, the recycle trade, so 667.11 would be 667.16. So yes, more than 20 minutes had gone by. You would not have been in the reversal at this point, but this is kind of a clue. They came down with a low of 676.17, 1 penny, and then rocketed away from this. So depending on how you were looking at this, this could have been a clue just to jump out at your break even. But sticking to the rules, reversing after that 16-point fumble gave you at least a 4-point base hit to wash some of that out. So ending the day behind the curve, strictly speaking. By the way, when they came back down into 678.39, you're not going to take a recycle trade on the long side for a bounce because look at the time. It's only 3 minutes before the closing bell. We're not touching anything within the last 30 minutes of the closing bell. So playing by the rules, negative 8 points or so for the day, unfortunately, considering that we had the schematic to go long early in the day, and I really wish I had done that, but I didn't do it. I just want to point out that it was possible, understanding what the game plan said in the big picture. My trading activity for the day looks like this. After that 15-minute window is open, they're down here, and I'm seriously considering going long here. You see me kind of mess around a little bit, but ultimately, once they got away from this level, I just considered it done. It's a near miss. I decided to play by the rules, so therefore I did go short at this next level and rode this thing up. And I have a 20-point max loss limit sitting here, kind of a stop limit. I got rid of that because I'm willing to go short again up if they got up to 678. But ultimately, and they didn't get there, as you can see, at this point at least. But ultimately, when they came back down to the break even, I gave it a little longer than I should have instead of jumping out at a wash, because that was, that's expected. They didn't respect the level the first time. When they come back around to it again, that's why these recycle trades exist. Anyway, I was getting ahead of myself here, but I jumped out at 8 points or so. Fumble, I think it was 8 points. 12 points, sorry, 12 points. I'm looking at my log over here on the other page. And so that would have been it. And I think I let this thing go until a little after 11:30, just to see what they would do. But that's not the end of the story. So here's 11:40. Here we go. So coming back here at 12:30, almost an hour later, I had a notification on my phone that they were approaching this next level. So I decided to go ahead and play by the rules again and go ahead and trade this. So this time it was in the system to trigger. In other words, if the SPY hit 680.59 per the rules, the E-minis would get a short position in the E-minis with 6 contracts. Plan was to take 5 off at a base hit to 4 points and trail the remaining contract down. And I think I had a 6-point trailer, not really enough. You can see it kind of brought it down to break even and never got any farther than that. Thought it was possible for them to come back down to this next level. They did eventually, but I wasn't on board because you really need something like an 8-point, 10-point, maybe 12-point trailer to withstand moves like this. And my 6-point trailer didn't work. As you can see, they got stopped out right there. So just got $1,000 for that level there, and that was all I did. So those were the 2 trades that I took. Still put me behind the curve, and I've erased the few gains that I made in October. So far, November's not looking good, but time will tell what happens. I just wish I jumped on board early in the morning, knowing that it was at the perfect time of a bullish consolidation to get on board. In fact, let's look at that right now before we go to the logs. So here's an hourly chart right here. Let's put some levels on the board here. So we had a line in the sand at 674.35. That was kind of our axis level. So you get the idea, 674.35. And then I was saying that this was a bullish consolidation. You had a pretty big up candle the day before, and they're stair-stepping their way down to the bottom of this. And the last candle of yesterday was here, last hourly candle. So this is this morning right here, 674.50, 30. It kind of dipped below that 35 level. And then we talked about 680 being a target. 680 even is up here somewhere. So this was the time to get on board because this hourly chart said so in the morning. Then here's a 30-minute chart. Same thing, not as clean, but the timing's good. Also, you had this 200 period moving average on the 30-minute chart, but the timing was good both on the hourly chart and this 30-minute chart for them to break out of this area and go higher. That could have been the 50-something point trade today, but it's neither here nor there because I did not take it. So here are the logs playing by the rules. Starting at level 5, not triggered. That was where the launching point was. Unfortunately, it was a near miss if we're strictly playing by the rules. A short trade at 676.11 would have resulted in a 16-point fumble plus a 4-point base hit on the reversal of that. Did not trade 678.39 here at level 7 because of the near miss, and then a base hit at 680.64. So negative 8 points for the day if you were playing by the rules. And then Sam's trades over here, you can read through the notes. Ultimately, 12-point fumble on that first trade, and then a net 3.33 points on 6 contracts both times. Whatever that is, negative 8 point something points. It was $2,600 in the red before commissions. I'm starting to backslide on my rate of return so far for the year. So back on the daily chart, go ahead and get rid of these levels. Where to from here? Well, nothing really has changed. This is the line in the sand still, 674, that general area. It's going to be important tomorrow as well, most likely. Anything can happen. They could gap above or below this, but at this point, they're just kind of messing around with this area, and the bulls want to stay on top of it. And if they can't, and the bears get priced down in this area, well, we'll talk about that later. There's still going to be levels, interim levels, quite a bit, I'm sure, underneath this that could provide base hit trades, but no real big setups at this point that I can see. We'll see what things look like in the morning. That's all I really have for today. Thanks for watching. We'll have fresh levels before the opening bell tomorrow, and we'll do it all over again. Now, I will say that I will be traveling. The 13-hour drive that I had coming to where I'm at is going to happen again going back home tomorrow. Probably not going to have a chance to trade, although I will put out the levels and the game plan well in advance before the market opens. Thanks again for watching. I will talk to you in the next recap video. Have a great rest of your day.